Hello guys, do you have any stocks that are in losses and you would like to get rid of those stocks to save taxes? If yes, then you should do it carefully and tactically, otherwise you would fall into the trap of what is known as tax loss harvesting, and IRS has very strict rules to tackle the tax loss harvesting by the way of wash sale rule. So in this video, I'm going to explain you quickly what that rule is and how you can avoid it completely and very easily. So if you are interested, then please stick around. We are going to discuss all about it. So let's get started. Hello guys, welcome to my YouTube channel. If you have not subscribed yet, then please do so. I make a lot of videos mostly around the options trading and investing in general. So you would definitely benefit from the channel. Okay, if you're completely new to IRS taxes and how the capital loss and capital gain works, then I would highly recommend that you check out the other video that I have made on this series here, or I'll put the link down in the description. Okay, coming to the topic of today, which is how you can actually gain from your losses in terms of taxes, or how you can save taxes by putting the losses into work. And before we understand that, let's first quickly understand what is tax loss harvesting is. So sometimes an investment that have lost value can still do some good, or at least not be quite as bad as you think, right? So the strategy that changes an investment that has lost money into a tax winner is called tax loss harvesting. Tax loss harvesting may be able to help you reduce taxes now or in the future too. And tax loss harvesting allows you to sell investments that are down and replace them with reasonably similar investments, and then offset realized investment gains with those losses. And the end result that you get is that less of your money goes to taxes and more may stay invested and working for you. Now, all that sounds good in terms of tax loss harvesting. However, please remember that IRS has very strict rules when it comes to the substantially similar kind of stocks. So let's say you sell a Google and then you try to buy something very similar in nature. For example, you buy a Google Call, then you could fall into the trap of what is known as wash sale rule, right? So let's understand what it is. So wash sale rule in simple terms is a rule enacted by IRS to prevent investors from using the capital losses to take advantage in their taxes in kind of a roundabout way. To further explain that, I would give a quick example. Let's say that you sell Google again for a loss of $1,000 and then you buy back the same stock within 30 days, then you fall into that wash sale rule criteria, and the losses that you would have by selling that stock of Google, you will not be able to claim that loss for your taxes. So that's where this rule kind of prevents you from taking advantage of your losses. Also remember the timing of it plays an important role as well. Since it is end of the year almost, it is very crucial that you pay attention to the timing of it, and I'm going to discuss that as well. So let's start with the example. Okay, let's say suppose you have a stock with a cost basis of $1,000 and you sell it for $900 in suppose late December, right? And this would result you a net $100 in losses. Now suppose you buy back this stock again in early January for $950, right? And that would be considered a wash sale. Why? Because you sold it in late December and then you are buying it back in early January. So you are kind of buying it within that 30-day window that IRS have defined for the wash sale rule, right? And because of that, you are not able to claim that loss for the previous year tax. And one more thing to note here is that in this example, the new basis for your stock would be now $1,050. And the calculation for that is, it is kind of your original basis plus the difference in sale and the repurchase. So that becomes $1,050 your new cost basis. So whenever you decide to sell this stock, your cost basis would be considered as this new $1,050, not your old cost basis. So that you have to keep in mind. Okay, so that was about the problem statement, right? Now let's look out the solution, how you can actually avoid it. So the solution is pretty simple. What you can do is you could, however, sell the same stocks in early December. Instead of doing it late in the December, you do it early in the December, or I would say you do it late November itself, and then wait for at least 31 days, and then you can buy back in late January, and that would avoid this was sale rule completely. So simply wait 31 days after selling and before buying the same stock again. And my recommendation would be that this is the right month and this is the right time if you want to take advantage of this. Like if you have any stocks that are not performing well in your portfolio and you want to get rid of those stocks, this would be the right time to do it. You can go ahead and sell that and book that loss. And then if you think that you still love that stock, just wait for the new year and wait for the 30-day period. So wait for that whole December and then you can buy back in January. So that makes it very clear for taxation purpose. IRS would not apply the was sale rule on that repurchase that you would do in January. Okay, so let's quickly recap, right? So what we discussed was if you have any losses in your portfolio, you can definitely take advantage of that losses for your taxes. You can use that to reduce your taxes. However, you should keep in mind the two factors that we discussed. One is tax loss harvesting, what it is, and the second, that is the main important thing that you have to take care of, is the was sale rule. And the way to avoid that if you are selling something for loss, you should wait at least 31 days to repurchase the same stock or very similar kind of equity. For example, buying a call for the same stock. So that was it guys for this video. I hope you liked it, and if you have any questions related to this rule or anything in general about this capital gain or loss or anything related to taxes, I'm not an attorney, but this is based on my own experience. I can definitely help you guide to the right resources, or I can answer you directly. So if you have any questions, do put your questions in the comment box and I will respond there. And again guys, if you have not subscribed to the channel, please do so, and do give a like and thumbs up to this video as well. Happy investing guys. I'll talk to you in my next video. Bye bye.